Hi, I'm Logan Schiro, and this is Business Finance. Let's take a look at three large companies and compare them by analyzing their short-term solvency ratios, long-term solvency ratios, profitability, and market value ratios. Then answer three questions. Which company would you loan $500,000 to? Which company would you loan $5 million to? And which company would you buy or invest stock or buy into? Short-term solvency ratios tell us the company's ability to pay bills in the short run, also known as liquidity ratios. Current ratio, quick ratio, and cash ratio. Long-term solvency ratios tell us the company's ability to meet long-term obligations, also known as financial leverage or debt ratios. These ratios include equity multiplier and times interest earned ratio. Profitability and market value ratios tell us the company's ability to generate earnings compared to its expenses and other relevant costs incurred during a specific period of time. These ratios include total asset turnover, profit margin ratio, and price to earnings ratio. Our first company is Entergy. Entergy Corp is an integrated energy company engaged primarily in electric power production and retail distribution operations in deep south of the United States. It is headquartered in the Central Business District of New Orleans, Louisiana. EBA-SCO was dissolved in 1949 under the provisions of the Public Utility Holding Company Act. Mississippi Power and Light, Louisiana Power and Light, New Orleans Public Service, and Arkansas Power and Light were doomed to be integrated system and were reorganized under the control of the new holding company, Middle South Utilities. It changed its name to Entergy in 1989 and bought Gulf States Utilities based in Beaumont, Texas, as of 12 o'clock midnight, January 1st, 1994. Since its inception, Entergy has been headquartered in New Orleans. That city had also been home to Entergy's various corporate predecessors since 1925. After Hurricane Katrina hit the city of New Orleans in August 2005, Entergy temporarily relocated the 1,500 employees and contractors who worked at the headquarters to other cities, including Clinton, Mississippi, Little Rock, Arkansas, and The Woodlands, Texas. In April 2006, the company began moving back into its New Orleans headquarters. Here's a chart that shows the short-term, long-term, and profitability and market value ratios for Entergy from 2014 up until current year 2017. Current ratio can be used to take a rough measurement of a company's financial health. The higher the current ratio, the more capable the company is of paying its obligations. A ratio under 1 indicates that a company's liabilities are greater than its assets and suggests that the company in question would be unable to pay off its obligations if they came due at that point. The cash ratio is most commonly used as a measure of company's liquidity. The metric calculates a company's ability to pay current liabilities using only cash and cash equivalents on hand. If a company's cash ratio is equal to 1, the company has exactly the same amount of current liabilities as it does cash and cash equivalents to pay off those debts. Therefore, it would be appropriate to lend Entergy the short-term loan of $500,000 because even though it is a debt-financed company, it's almost guaranteed that you will get paid back according to the short-term ratios. Amazon is our second company. Amazon.com is an American electronic commerce and cloud computing company that was founded on July 5, 1994, and is based in Seattle, Washington. The tech giant is the largest internet-based retailer in the world by total sales and market capitalization. Amazon has separate retail websites for the United States, the United Kingdom, and Ireland, France, Canada, Germany, Italy, Spain, Netherlands, Australia, Brazil, Japan, China, India, and Mexico. In 2015, Amazon surpassed Walmart as the most valuable retailer in the United States by capitalization. Amazon is the fourth most valuable public company in the world, the largest internet company by revenue in the world, and the eighth largest employer in the United States. In 2017, Amazon announced their plans to acquire Whole Foods Market for $13.4 billion by the end of the year, which would vastly increase Amazon's presence as a physical retailer. The acquisition was interpreted as a direct attempt to challenge Walmart as a physical store. Here's a chart that shows Amazon's short-term, long-term, and profitability and market value ratios. The equity multiplier is calculated by dividing a company's total asset value by total net equity, and it measures financial leverage. Companies finance their operations with equity or debt, so a high equity multiplier indicates that a larger portion of asset financing is attributed to debt. Times interest earned ratio indicates how many times a company can cover its interest charges on a pre-tax earning basis. Therefore, it would be appropriate to loan Amazon the long-term loan of $5 million because it is a stable company that is continuing to grow and advance into new sectors of industry, and according to the long-term ratios, you are almost guaranteed that you will get paid back. Facebook is our third company. Facebook is an American for-profit corporation and an online social media and social networking service based in Menlo Park, California. The Facebook website was launched on February 4, 2004 by Mark Zuckerberg, along with fellow Harvard College students roommates Eduardo Saverin, Andrew McCollum, Dustin Maskovitz, and Chris Hughes. Facebook may be accessed by a large range of desktops, laptops, tablets, computers, and smartphones over the internet and mobile networks. After registering to use the site, users can create a user profile indicating their name, occupation, schools attended, and so on. Facebook Inc. held its initial public offering in February 2012 and began selling stock to the public 3 months later, reaching an original peak market capitalization of $104 billion. On July 13, 2015, Facebook became the fastest company in the Standard & Poor's 500 index to reach a market cap of $250 billion. Facebook has more than 2 billion monthly active users as of June 2017. As of April 2016, Facebook was the most popular social networking site in the world based on the number of active user accounts. Here's the chart of Facebook's short-term, long-term, and profitability and market value ratios. Total asset turnover ratio is the ratio of the value of a company's sales or revenues generated relative to the value of its assets. Generally speaking, the higher the asset turnover ratio, the better the company is performing, since higher ratios imply that the company is generating more revenue per dollar of assets. Profit margins are expressed as a percentage and, in effect, measure how much of every dollar of sales a company actually keeps in earnings. The price-earnings ratio indicates the total dollar amount an investor can expect to invest in a company in order to receive $1 of that company's earnings. Therefore, it would be appropriate to invest stock or buy into Facebook because while the stock price is still fairly low, the value and profit of the company will continue to increase as shown in the profitability and market value ratios due to the amount of people and businesses utilizing Facebook by connecting and advertising.